Welcome to World Finance Brief. Today, we're digging into a headline that absolutely rocked the tech and finance worlds, one that just completely blew market expectations out of the water. Yeah, we're talking about the semiconductor giant, TSMC.
All right, so let's set the scene here. Going into their latest earnings report, the mood was, well, pretty pessimistic. The general feeling among analysts was that after this incredible long run of growth, TSMC was finally due for a slowdown. The big question on everyone's mind was, is this it? Is the giant finally going to stumble?
Well, the answer was a huge, resounding no. No stumble at all. Instead of a slowdown, TSMC came out and reported a staggering 35% jump in net income year over year. I mean, this wasn't just a small beat. It was a massive knockout punch to expectations. And get this, it marked their 8th straight quarter of year-over-year profit growth. Just incredible.
And believe it or not, it gets even better. That one explosive quarter was enough to push TSMC's annual revenue past the $100 billion mark for the first time ever. I mean, that's a truly historic milestone. It really cements their status as an absolute titan of the industry. So, the big question is, how on earth did they do it?
Okay, let's break it down, starting with this record-shattering quarter. They really defied expectations with some blowout results. The performance was just so strong across the board, what folks in the industry like to call a double beat.
Look at these numbers. They didn't just beat expectations, they absolutely crushed them. Revenue, net income, earnings per share, all way higher than what the analysts predicted. And you really got to look at that gross margin, 62.3%. That's up over 3% from the year before. That tells you just how insanely profitable this company is, even while it's growing at this pace.
So, what's the secret sauce? What's the engine driving these incredible financials? Well, it all boils down to one thing: their massive, undisputed lead in technology. Let's dig into how those cutting-edge chips are powering these insane profits.
Okay, this chart right here tells the whole story. A whopping 77% of their wafer revenue, it's coming from their most advanced chips. We're talking about the 7-nanometer chips and even smaller ones. These aren't just any products. They're the ones with the highest profit margins, the ones everyone is clamoring for.
Now, you might be hearing nanometer and wondering, why is smaller better when it comes to chips? Well, here's the deal. A smaller nanometer size basically means you can cram way more tiny transistors onto a single piece of silicon. And what does that get you? It gets you processors that are ridiculously fast and way more energy efficient. That is the absolute key for all the powerful electronics we rely on today.
So, what's the big demanding application that needs all these super advanced chips? I'm sure you've already guessed it. The single biggest driver, the mega trend fueling this whole thing, is the absolute explosion in artificial intelligence.
And here's the proof right here. Look at this breakdown. High-performance computing, which, let's be real, is mostly AI chips and 5G stuff, now makes up 55% of TSMC's entire business. It has officially blown past smartphones to become their #1 source of revenue. That just shows you how much the entire AI revolution is built on their tech.
And if you think this is just a temporary blip, think again. This trend is not slowing down. We've got folks like Jake Lai, a senior analyst over at Counterpoint Research, saying that 2026 is going to be another breakout year for AI server demand. That tells you the main engine pushing TSMC's growth is still running at full throttle.
But here's the thing about TSMC. They are not a company that rests on its laurels. They aren't just riding the current AI wave. They're already busy building the next one. They are doubling down, investing heavily to make sure they stay on the absolute cutting edge. Just look at their track record. It's insane. They mastered 7-nanometer, then they scaled 5-nanometer. Right now, they're the world leader in 3-nanometer production, and that's already a huge chunk of their revenue. But are they stopping? Nope. They're already kicking off high-volume manufacturing for the next generation, 2-nanometer chips. It's this relentless pace that keeps them light years ahead of everybody else. And they are absolutely putting their money where their mouth is. To pay for all this innovation, they've announced plans to spend somewhere between $52 and $56 billion in 2026. Let that number sink in for a second. That's a massive, massive investment, all aimed at building the factories, the fabs, and developing the tech for the chips of the future. And all that money isn't just being spent in Taiwan. They're thinking globally. It's a smart move. Really, it helps them serve customers all over the world and, navigate the tricky geopolitical situation. So you're seeing major projects popping up in Japan, they're expanding in Europe, and they're really hitting the accelerator in Arizona, where they're building this huge new gigafab cluster. Okay, but it can't all be smooth sailing, right? Of course not.
No company's future is ever a sure thing. And for all of this incredible success, there are definitely some storm clouds, some real challenges on the horizon for TSMC.
And that really brings us to the million-dollar question, or maybe the trillion-dollar question for investors, for the whole industry, for all of us, really. Can TSMC's dominance just keep going on, unchallenged? Or are the risks starting to pile up?
So let's look at both sides of the coin here, the bull case versus the bear case. The optimists, the bulls, they have a pretty strong argument. AI demand is just off the charts, their tech lead with 2 nanometers seems untouchable, and expanding globally is a solid strategic move. But then you have the bears, the pessimists, and they've got some real points too. Things like global tariffs are a big worry, even the CEO has mentioned it. Plus, building these factories overseas, it's way more expensive, and that could start to eat into their amazing profit margins. And you can't forget about other potential hiccups, like shortages of other parts that go into the final product.
Which brings us right back to the core debate, the big question we want to leave you with. Looking ahead, what's going to matter more for TSMC's future? Is it their unbelievable technological lead, that innovation engine that seems unstoppable? Or is it the growing storm of geopolitical risks and economic challenges?
Honestly, it's a super complex question, and you can make a great argument for either side. That's why we really want to know what you think. Which factor do you believe will win out? Let us know down in the comments.
All right, that's it for this deep dive. Thanks so much for watching World Finance Brief. If you enjoyed this and want more breakdowns of the biggest stories shaping our economy, do us a favor and hit that subscribe button. We'll see you in the next one.